So this the trade I want to go over that's from Friday that we took from Friday. So what we had was we had SMT right here also, like right here. Let's see if I can be able to pull it up real quick. Let's see if I can get it up Monday. This Monday. That's the 1 minute. That's why that's showing like that. Let's go to the 15 minute. Here we go. And if y'all can't see that good, let me know because I will try. But basically, I just wanted you to be able to see this little piece of price action right here. We got SMT because right here the S&P did not take out its the S&P did not take out this low, but right here we did take out this same low. So once I seen that SMT, that's one of the first things I'm always looking at and be like, okay, if we have one asset that didn't take out a low and the other one did, we knowing that that's a cracking correlation and that could be a sign for a reversal. So like that's one of the first things I'm looking at. And since we did sweep this on NQ, once we swept this on NQ, I'm instantly looking like, okay, price could be trying to get bullish because we did get a liquidity sweep, and now we got this liquidity sweep. But just because we got this liquidity sweep, I'm still kind of being patient. Because like if you look at these candles, this the 15 minute. If you look at these candles not really strong. They got wicks on both sides, and it's just doing a lot of nothing really. Like it's going down, but it's a lot of going back and forth. So what I'm looking for is some strong movement after we get this liquidity sweep. And as you can see right here, we get this liquidity sweep. We get some strong displacement. Like we get strong candles that close above this high right here, creating this market structure shift. So that's one of the best things that you can see when you're looking for a trade is you get a liquidity sweep and you see a strong market structure shift. So once I seen that strong market structure shift, now I'm looking for a fair value gap to be created. And we have we have this fair value gap created right here. And if I draw this fair value gap out right here, you will see right here on the 15 minute, we tap into this fair value gap. And while we tap into it on the 15 minute, you could be the type of person who just like, okay, we got displacement. Because that's how some people will look at it. Like they'll see, okay, we got a liquidity sweep, market structure shift. We tap back into a fair value gap. I'm just gonna enter off of this 15 minute and see where it takes me. But I love extra confirmation. So as we tap into this 15 minute gap, now I go down to the 5 minute to break down what's going on inside of that 15 minute gap. So if we look here on this is the 15 minute gap. This right here is the 15 minute gap. And as you can see, I'm gonna change the color to yellow. Nah, yellow, because that's already yellow. It'd be hard choosing these colors. Let's do purple. This 15 minute gap is purple. And as you can see, this blue one right here, this is us tapping into a 5 minute gap. And I know you're probably like, what you're gonna do? You just gonna enter on this 5 minute gap? No, since we got this 5 minute gap now and we tapping into it, I'm gonna go down one more time frame and I go down to the 1 minute now. So this is how like you pair all of your time frames because we're tapping into fair value gaps on all of them. And now you can see I don't go any further than the 1 minute. But now I'm looking for my entry setup, which is a inversion setup. And what an inversion is like typically how this price was going down from here and all up in here, price was going down. Typically, when price taps into a fair value gap like this, price just continues to go lower. But if we have an inversion, what happens is its price instead closes above the fair value gap and goes higher. So when we blast through a fair value gap, instead of respecting it and going low and we blast through, that lets us know that we are getting bullish price action. Let me take this off so it can make it a little cleaner. So once we got this inversion here, and this wasn't a plus plus setup, it almost was a plus setup. The only thing is that I kind of front ran it a little bit, and with front run mean is just basically I got in a little earlier than I was supposed to, and I did that because of the conviction I had in the trade. Because if you see on this candle here, it did not close above the inversion. It almost did, but it didn't close above it. So technically, I was supposed to get in when we closed here, but I front ran it and got in a little early. And I know you might be looking at this move like, okay, our price went up some and then price started going down. But on this trade, I only needed to target to this high right here. And if I'm targeting just to that high, let's see how many points that is from entry to up there. That's about 46 points. And 46 points, that's a good and decent modest amount. And that's typically how much I'm targeting. But when I do have trades that get a lot of more points, I'm also cool with that. But you see from this one setup that came from the 15-minute, how I broke it down, I went from the 15-minute to us tapping into a fair value gap on the 5-minute to us tapping into this. This is us tapping into this fair value gap on the 5-minute, and we got that inversion set up, and then price went to our target, and then price reversed. But what also happened, like let's clear that out and just pull up this. I just want to see this chart. And what I'll show is how price continued. Let's see. Let's find that piece of price action again. Let's find it again. I didn't mean to delete all of that though. Let's go back. Okay. Let me find that price again. Let's see. Well, I guess it's cool if it don't stay up here. Oh, they got me on the 1 minute. That's the problem. Okay, here we go. Perfect. And as you can see, what I was looking for though on this price, after I took that first trade, I basically took, if we're just looking at the 15-minute, when price tapped in on this candle, I took it from this low up until this high. And after we took this high, what did price do? Price retraced, and then price went higher, retraced, and then went higher again. So I was able to catch multiple trades because I was very bullish because we got this liquidity sweep here. So after I took that first trade, I was down on my 5-minute time frame. Let's see. I was down here on my 5-minute time frame, and what I seen was, let's see, is it this one? It's this one. Let's find it. So right here, I seen we pulled back, and as I seen that we pulled back, and we just stopped here, and we kind of stalled out. I was looking at this level right here. I was like, okay, we kind of swept this level. So what I was looking for after we swept this level is now, and I know that price is bullish. I'm looking for another one of my inversion setups. Like I told, like with these fair value gaps here, if price is going to continue to be bearish, price should tap into this fair value gap and it should reject and go lower. When the inversion or a IFVG to give it an abbreviation, if we want to create an IFVG, we should see price close above the inversion. And if you see here on this candle, we closed above the inversion. Entry would have been here, and then price just went higher. This was us just catching a continuation from the same trade that we had already, the trading trade that we had already been in. Like we caught it from here to here, price retraced some, and then we caught it some more. And then I can show you another setup that we were able to catch also because it happened again. Like if you look at this, we're on the 5-minute. You look right here. This was the area where we created that market structure shift, correct? Like we can delete all this now and we'll do it again. This is the area This is the area right here where we created displacement and we got that market structure shift here. So, and then price pulled back. So now we have another area, price pulled back, and then we got another displacement. And once we got that displacement, it's just like the first setup. We displaced, and then what did we do after we displaced? We tapped into this 5 minute gap right here. So it's almost identical to the first setup. We tapped into this fair value gap here. So now, once we tap into a fair value gap like this, I can, because it's a continuation, I can either choose to take this off of the tap into the 5 minute gap, or I can go down to my 1 minute time frame. And what I'm looking for on my 1 minute time frame is to see, do we have some sort of an inversion? And we don't have inversion. All we have right here is a tap into this fair value gap. So we tap into here and we come out a little bit. So as we come out, I could take this trade with us just tapping into this fair value gap and be like, okay, we have been going up and creating market structure shifts and just pulling back. And it's just been a continuation day. So I could be like, okay, I want to take this trade. I want to enter on this candle because this is the candle that tapped into the fair value gap and really came out and shown some signs of bullishness. So I got in on that trade, entry here, and then I targeted a 2-to-1. Like typically you want your trades to be at least 2-to-1. And you can see how this trade worked out from a continuation of us. If we looking over here, you see you got your market structure shift here. And right, well, we market structure shift here with this displacement candle. We pulled back into it on this 1 minute, also on the 5 minute. And then once we did that, price continued to just go higher, and we was able to catch that 2-to-1. And this was about, from this trade, this was about 80 points right here. This was about 80 points. So almost 100 points on that trade right there. And like, let's delete this and let's go into today's price action. Let's go to the 15 minute. And let's see. It's similar. It's a very similar setup. We have right here. This was a market structure being. Let's also pull up and back up these ICT kill zones. So right here, if we just dig into this price a little bit, you see we have London high and you see we have London low. And this candle here is outside of London, but you see what we end up doing. We're outside of London. We end up sweeping this London low. So typically when we sweep a London low, we are thinking price could turn around and come up into that London high. So with us understanding once we sweep London low, we could be going to London high. What we end up seeing is when market opens, we end up going above this London high and we displace above it. Like we don't come here and just sweep it and then play around and turn around. Like we displace above. We get strong, bullish candles above this. So once I see these strong bullish candles above this, now I'm going to my lower time frame. So typically if you see a large displacement on a 15 minute or a 5 minute, or you get like a strong market structure shift on a 15 or the 5 minute, that's when you want to dial down onto your lower time frame. So with this strong displacement here, I then went down to the 5 minute to see within these 5 minutes, was it any pullbacks? And you can see this is still the same London high. This is that same displacement that we seen on the 15 minute is just broken down into 5 minute candles where we can see price a little better and we can find those pullbacks. And if you see right here, what do we have? We have a pullback. Price went up above that London high. We displaced above it. We got this pullback, a fair value gap right here. And you might be like, okay, can I just enter off of this 5 minute gap? Yeah, you sure could. But what I like is extra confirmation with my inversion fair value gap. So while we're tapping into this 5 minute gap, can you guess what we're gonna do next? It's gonna go to the 1 minute. We're gonna go to the 1 minute. And while we on this 1 minute, it's just like the setup I showed before. I want to look for an inversion setup inside of that 5 minute gap. This purple box, and we can take this off again so we don't get confused. This purple box is a 5 minute inversion setup. Let's do this so we can make sure we understand it. Let's see. Do I got 5 minute gap on here? Let's see. I don't have 5 minute gap. Okay, so I just write it, man. Let's see. I'll put the minus sign 5 minute. Okay. So this is a 5 minute fair value gap that we have tapped into right here. And as a plus, when I'm seeing that we tapped into this 5 minute gap, we ask this as a confluence while we're in this 5 minute gap looking for our inversion. We are also tapping into a 1 minute gap, and that like adds extra confluence, because what do we look for when price taps into gaps? We look for it to tap in and head out. So once I see that we tapped into this 5 minute gap while we're also tapping into this 1 minute gap, now I'm looking for us to close above my inversion, which is this fair value gap here. Because again, I know if price wants to get bearish, price should enter this fair value gap on these candles here, and it should reject and just keep going lower. If we close above the inversion, if we close above this candle or the fair value gap, then we get an inversion letting us know that price is strong. So
So,
what
yo, inversions are candles that tap into those fair value gaps.
inversion don't have to tap into a fair value gap. It's just your inversion is just, it's simply, let's turn. Your inversion is simply a fair value gap that has been disrespected wherever it's at. Like, because typically, or closed above, because typically when we get a fair value gap, price taps into the fair value gap, and then you expect it to go lower.
Damn, yeah.
Like, typically, like how you see how price right here taps into this fair value gap and it goes higher. That's what we
Uh,
like to see with a fair value gap. We like to see price tap into the fair value gap and go higher. So, and we know us tapping into this fair value gap and going higher, we know that that's bullish. So if we know that, then we know that the opposite has to be true. If we were to be bearish, wanted to be more bearish right here, we would not want to see us tap into this fair value gap and go higher. We would want to see us close below the fair value gap, because once we close below the fair value gap, we have inverted it. Like, so basically we have the fair value gap here and we close below it, that will create an inversion or an inverted fair value gap. So that's typically what we want to see. We want to see us disrespecting the fair value gap that's bearish if we're bullish. So with us seeing, we would draw this box out here with our fair value gap, and like we want to see it close above it. We want to see us close above the fair value gap. And if you can see, this setup, when I say it was almost identical to the one from Friday, because like how I said, I front ran the one on Friday, I also ran the one today. And this is not something that you want to do a lot. You don't want to front run or want to front run them a lot, but I had a lot of conviction, a lot of belief and trust in this setup. So once I seen this inversion, I seen us right here, like how we was looking like we was about to close above it. I front ran it and I entered here, and I also paid for it with having to go through a little drawdown. So with me entering here, I went through a little drawdown, went through a little chop. Where I was actually supposed to enter was here. This where I should have been entering when we actually closed above it. But since I did it and I front ran it, and it still worked out in my favor, but I just had to wait some. So I still had to wait some, but I really was supposed to get in here with the first closure above the inversion. So I entered here, and what I was looking for, I was looking to see could we come and take out the previous daily high. And this level here was the previous day, not previous day, but the high from earlier in the day, not the previous day high, but the a high that was the earlier high in the day. And so we did come up and take that out. Like we can see how many points that was from entry. Like this was another almost 60 points just to here, in which once we got to here, I did go break even and I did leave runners. But this is the same type of setup that I'm capturing every time, and I will have more examples on this setup and how it shows up in different forms of fashion.